Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Buick. Today is Hump Day. Wow, got here pretty quick here with this short week. It's January 3rd today. We got a few economic news releases scheduled for today. We'll start off with the ISM manufacturing data for the month of December. Anything above 50 on this index represents expansion. So we had a 58.2% back in November, and forecast supposed to be in the same range, but slightly lower at 58. And instead, it went upwards to 59.7. So, of course, market will like that news that manufacturing had a nice uptick in the month of December. On the other hand, we also get construction spending for the month of November. So October had a pretty good month, jumping up 0.9%. It was supposed to go up only 0.5% in month of November, but it went up to 0.8%. So still pretty good number right there in the same range. So we obviously like to see more spending in that areas with the construction. Then later today, we'll have the FOMC minutes, which can create some volatility in the markets. They're going to definitely be looking at that. They're going to check into uh, comments or any mention about the possible rate hikes going into 2018. What's going to be the power influences? Is it automatic rate hikes? Are they going to be looking at certain specific numbers that they want to feel comfortable with that will measure certain measurements that will lead them to rate hikes, or could it be possible more rate hikes or less? So they're going to be looking at that. Now be coming out by 11 o'clock Pacific Standard Time. And so you could probably expect maybe possible volatility at that time, depending on if there's anything in there that people weren't aware of, at least investors weren't aware of. So here in the headline news, stock market is up. It's taking its cue not only from the data we just saw, like the manufacturing, which I liked, as well as construction spending, but also it's kind of what's leading the way is Asia kind of led the way with a lot of the tech companies over there are doing quite well, and so they've been taken off, and it's kind of trickling its way over here from Europe to U.S. here as well. Some stuff that could play a role as well at some point is not so much today, it's more on the back burner, but stuff that's going on in Iran, North Korea, especially at this moment. More Iran with the protests that are going on there. People, unfortunately, people are dying. Our thoughts and prayers with those folks over there. Hopefully, things things get better for those folks over there. Um, but yes, those are things that they're keeping an eye on. And of course, for investors, what they're looking at is oil. If there's any disruptions in oil and stuff. But in any scenario, again, our thoughts and prayers are with those people over there. Let's kind of move along here and to the bond market. The bond market is kind of rebounding after yesterday. As you saw, we had a huge up, back and forth here. We were pretty much towards late of the day. We are way down here. We are down quite a bit. About I think it was about over 20 basis points, like 28 basis points or so, and we pulled back to only about 16 basis points, being down about 20, yes, about 16 basis points. Today we're up about 11 to 13 basis points. Since I've done this, I think when I did this chart it was about 11 basis points, but since it's kind of got up to 13, it's been kind of fluctuating between 11 and 13 so far this morning here. And with that, we're jumping up ahead of the 25 as well as the 50-day moving average. So this would be kind of good if we can get up, bust above that. It'll give us a little bit more of a support and hopefully bring us up against this level of resistance here. So this would be our first level of resistance. See if we can break above that or not. On the other hand, we got the Treasuries. So Treasuries pulled back a little bit from yesterday. Yesterday, as you saw, we were way down and we were even way up. We were up at 2.48 at one point, and right now we're down about another down to about 2.44 right now. As a result. So again, we're trying to push this lower so we can have better rates. But again, the global rates had yesterday took off because reports came out that the ECB was not going to continue their asset purchases. So global yields all went up as a result, and we were no exception here. So rates got a little bit better today. We'll have a little improvement in our pricing for interest rates today, which is obviously good news for here on the real estate market. But you guys got any other stuff, come over to Twitter. You can find me on Twitter. You can ask me questions if you want on that Twitter, or if you just want to get data comes up throughout the day, especially the FOMC minutes coming out later today. I'll be posting more info on that later today. Just come over to Twitter, and my handle is Mike Bjork. So feel free to stop by there. Have a great day, everyone. Thanks for watching. We'll see you guys tomorrow. Bye-bye.